Hello and welcome to this week's edition of Energy Frontiers. I am Justina Okechukwu. This show has been proudly brought to you with support from the African Energy Chamber. As always, we begin with the headlines of energy quick takes from across Africa and around the world. Bumper profits from energy firms have reignited calls for them to pay more taxes after British oil major Shell plc on Thursday posted a stronger than expected first quarter profit of $9.6 billion and announced additional share repurchases of $4 billion for the next 3 months in order to deliver shareholders' returns. Meanwhile, oil and gas giant British Petroleum also reported a profit of $4.96 billion in the first 3 months of the year, thanks to a stronger than expected performance by its oil and gas traders. The London-based major stated that it would declare a further $1.75 billion share buyback for the quarter. The International Monetary Fund has projected that economic growth for oil exporting countries in the Middle East and North Africa is expected to slow down from 5.3% in 2022 to 3.1% in 2023 before increasing slightly to 3.4% in 2024 due to lower oil production in line with the October OPEC Plus agreement. Angola's National Oil, Gas and Biofuels Agency has signed a deal with Sonangol and French energy giant Total Energies for the development of 2 deep-water oil fields in the Kwanza Basin located in Angola. The agreement paves the way for the final investment decision this year following necessary approvals. Johannesburg-listed E&P player Sasol has announced that it has made a natural gas discoloration well in Mozambique. The well is the second to be drilled in the PT5C concession area located on the Mozambique Basin following the absence of hydrocarbons the first time. Latest reports by the African Energy Chamber shows that Nigeria, Libya, Algeria, Angola and Egypt are expected to account for approximately 80% of the continent's crude oil supply in 2023, with majority of the production coming from Nigeria and Angola. The first quarter 2023 Outlook report is available for download on the AEC website at www.energychamber.org. And that was a snapshot of your energy news headlines. When we return, analysts say that green hydrogen has the potential to make Africa a clean energy producer and exporter. More on this in just a moment. This is Energy Frontiers. The African Energy Council's latest white paper on the potential of green hydrogen production in Africa outlines how the region is positioning itself to become a major player in the global hydrogen market. Ayodeji Stephen, Hydrogen Research Fellow at the African Energy Council, told me more about the new report in this interview. Let's take an excerpt. Now, give me a brief overview of this latest publication about hydrogen potentials in Africa.
All right, thank you. So we decided to embark on this project because we were looking at the possibilities of hydrogen in Africa. We understand that a lot of study have been done. However, we wanted to include an African perspective in a way that reflects the situation in Africa. So we basically looked into the abundance of resources in Africa. Then we looked into what these resources mean for the African continent. We looked at policies and also the technical challenges. We did not leave out the impact of the financial capacity that is necessary to establish an African hydrogen economy. So the paper basically just speaks to African leaders, speaks to experts in the clean energy space, and also in the fossil space also as to the benefit of hydrogen, the impact it could make, and also the challenges that are currently being faced, and gives possible ways to mitigate these challenges.
Now, what opportunities abound in green hydrogen production in terms of exports and international trade?
Oh, okay. So the role of green hydrogen in terms of exports is one that has possibility of creating an impact on the African economy in diverse manners. I mean, take for example, we have hydrogen produced locally in Africa. It means that we can then begin to attract industries from all over the world to begin to come establish themselves in Africa, especially locations where that hydrogen is being produced. And when we talk about exports, we understand that even in medieval times, trade has been a way to assure economic development and expansion. So if we can create our trade routes and then we can organize it so well that we have an intra-trade pathway among African countries, and also one that also helps us to export to places like Europe, and some places in Asia, then we can have our economy expand, not just in terms of jobs, because that would be creating jobs. The hydrogen economy in itself creates a lot of jobs. It creates jobs for people in the maintenance department, in the production aspect of it, along the entire value chain, right? Now, aside that, it also creates jobs in export for people who understand that. And jobs is one thing that we want a lot of in Africa. We need a lot of jobs for our growing economy and also the youth. So hydrogen creates jobs. It also helps to establish trade routes that can expand the economy, bring in more funds into the economy, because if you're selling, it means that you have more money flowing in, right? And that money can be used to expand the economy in Africa. Much more, we can also begin to now, establish other things in terms of international relations with other countries, because whosoever you're able to provide what they need, then you can also, establish some kind of bilateral agreement that helps your people to do other forms of businesses in their country, and they can come to do business in your own country. I mean, these are just some of the things that hydrogen provides.
Right. So you've spoken about the vast opportunities that are embedded in these in regional routes and all of that. But how can regional and international collaborations be enhanced to develop a sustainable hydrogen economy?
All right. First off, it means that we need to come together in Africa as a whole and begin to systematically develop our own resource. That will mean that heads of government, parliament, and also politicians and policy experts, we have to come together and agree on how that we want to manage our hydrogen economy. One of the ways to do this is we having, a Pan-African dialogue. So that Pan-African dialogue will help us to be able to establish a base for the coordination of the hydrogen economy in Africa. And I give kudos to the African Union. I know that the African Union 2063 vision establishes some work around this. However, I believe that much more can be done, especially when it comes to African leaders, creating that bilateral agreement, not just seeking bilateral agreement with countries outside of Africa. We need to first develop that. With this, we can then begin to establish that with those in Europe and also in other parts of the world. One of the things I want to emphasize is that until Africa comes together to develop itself, we would not be able to achieve the kind of expansion and development that we need and we can command in the global space. Hydrogen is one that is now very important in the global economy. However, we need a Pan-African scheme that helps us to develop and domesticate what we have in a way that improves our economy.
Imagine a future where tomorrow's solutions build a world of opportunities for all, and where human potential is truly realized, where every child has an equal chance in life, no matter where they were born. Imagine the potential of a continent built on low-carbon oil and natural gas and abundant renewable energy. Imagine Mozambique, Angola, Nigeria, Uganda, Senegal, Egypt, Namibia, and Algeria being let free to develop their natural resources without pressure from wealthy countries to leave it in the ground. Imagine an Africa where we cut red tape bureaucracy and provide better fiscal terms so we can compete globally for energy investments. African Energy Week is the African Energy Chamber's annual event held at the Cape Town waterfront, uniting African energy leaders, global investors, and executives from across the public and private sector for 4 days of intense dialogue on the future of the African energy industry. Showcasing the latest technologies and innovations to 5,000 plus registered delegates from over 100 countries and international professionals from across the global energy sector. Be part of the future of the energy industry and join the energy movement by becoming an official sponsor, exhibitor, delegate, or partner. African Energy Week.
Welcome back to the program. The International Renewable Energy Agency held a webinar to examine the key findings from its joint report with California-based group Climate Policy Initiative on how public financing needs to evolve in order to support regions with a huge untapped potential. Listen to this.
So, achieving an energy transition in line with the 1.5 scenario also requires the redirection of around $1 trillion per year from fossil fuel technologies to energy transition technologies. However, we see that following a brief decline in 2020 due to the COVID pandemic, fossil fuel investments are on the rise again and continue to attract significantly larger investments than renewable energy. Over the 6 years following the Paris Agreement, some large multinational banks maintained and even increased their investments in fossil fuels, investing an average of $750 billion per year. And it is estimated that $570 billion will be spent on new oil and gas development and exploration projects every year until 2030. Next slide, please. So in addition to the large direct investments in fossil fuel, the industry is also continuing to receive considerable support through subsidies. Between 2013 and 2020, we find that $2.9 trillion were spent globally on fossil fuel subsidies. And in 2020, we see that Europe provided the largest subsidies per capita, surpassing the MENA region for the first time. And again, data for 2021 shows that fossil fuel subsidies doubled across 51 countries, going from $360 billion to almost $700 billion in 2021. For the energy transition to unfold, the phasing out of investments in fossil fuel assets should be coupled with the elimination of subsidies to level the playing field with renewables and with other energy transition technologies.
So this year's report, we look at the 2010 to 2021 period, particularly zooming in on the last 2 years since the COVID-19 pandemic began. So the pandemic was particularly concerning for the sector. As you know, supply chain disruptions led to an increase in manufacturing distribution costs economy-wide, but this was particularly problematic in this sector for solar home systems. Meanwhile, we also saw that household incomes shrank, and there were many cases of customers defaulting on their bills, and companies operating in this sector had to find new ways of securing working capital because a lot of their assets were tied up as receivables. So the summation of these challenges led to a decline in investments in 2020. But as you can see in this chart, in 2021, investments reached a record high of more than $500 million. This was primarily led by strong investment growth in Africa, particularly in West Africa and East Africa. Also from increased support from public financing institutions, particularly from the FIs, which provided the much needed boost in this sector. and also the increased concentration of investments among a few large companies that are driving the majority of these investments.
The 10th East African Petroleum Conference and Exhibition 2023 is due May 9 to 11 in Uganda as East Africa looks to position itself as a hub for investment in exploration and exploitation of petroleum resources for sustainable energy and socio-economic development. The African Energy Chamber has announced its participation too and will be sponsoring the high-profile event. And that's the show for you this week, and we thank you for watching. Remember to follow the program on Frontier Africa Reports website, subscribe to our YouTube, and follow us across all our social media handles as indicated on the screen. I am Justina Okechukwu. I'll see you next time.